Check, mic check, 1 2 3 4, mic check. Can everyone hear me clearly? Can you hear me clearly? Okay, hello, hello Omar, hello Omar Namuchi. Is my sound coming through clearly for you? Can you hear me all right? Just doing a little test right at the moment, but want to see how you guys feel with the YouTube live here. Okay, so we're just about 23 minutes away from the release of the University of Michigan Sentiment Prelim. What does it do? We're just giving a quick test here on the YouTube platform. But what does it do? It just measures the consumer sentiment for the next year or for the year ahead. And that includes inflation expectations and, of course, their spending expectations and how and whether they're in a job or not. So those are the key points for the University of Michigan sentiment data that we're expecting for today. Now, the forecast is 61 with a prior of 62.8. Usually, at a point when the economy is seeing a turning point, i.e., where the economy is on the brink of a recession, or at the start, or just before the expansionary phase of an economy, then we start to see, hey Gregory Trejo, I hope I said your second name right, Trejo. Hello to you indeed. So going back to, so if we're at the beginning of the expansionary phase, consumer sentiment is key to gauge. The reason being is if consumers are feeling confident about the prospects of where they're expecting the US economy to go in the future, and about their own situation of what about their own job and their expectations for themselves for the rest of the year, and inflation expectations for the year ahead and also 5 years ahead, then for traders, that's one of the key things that they keep an eye out for, as sentiment can also have an impact on government policy. If the government sees that consumers are not so confident within the US economy, then they could take a look at the University of Michigan sentiment data. The key point being, the reason why has a significance as well, for two reasons, actually two key points. One, the data is compiled and just the day before, or a couple of days beforehand, the release, just a couple of days before the release actually occurs. So this is quite a quick turnaround of what we're expecting from the survey. About 60% of the respondents reply back, so you'd get a decent response out of the 500 people that they interview on a monthly basis. The second point being that the Federal Reserve has mentioned that it's one of the ways they view consumer sentiment. So keeping an eye on that for the Federal Reserve is key for them. Again, at key turning points when the economy is either about to go into the expansionary phase or is on the brink of a recession, that's when it's more important. But during this current phase that we're seeing of expansion, and we're already expecting the first rate hike from the Federal Reserve next week of a 25 basis point hike, and the markets removing bets of a 50 basis point rate hike to be expected next week, the consumer sentiment has taken a back seat from what we've seen market reaction wise. So what I'm showing you here, and if you have been watching and if you can see the screen clearly, or if that is working for you, we're currently showing you the ES, or the S&P 500, and what the reaction was from the prior release that we had from the University of Michigan Sentiment Prelim back on 11th of Feb. So the figure from what we had seen came in, if you can see here on the Financials website, came in worse than expected at 61.7, the forecast of 67, prior being 67.2. So what this shows here is, even with this bad figure that we had received from the University of Michigan Sentiment Prelim data, the markets really haven't reacted to that data in a way. As of course, we have other bits of data that have taken over precedence. So, such as non-farm payrolls, the inflation report has taken more precedence at the moment, at this time, of course, when we're looking to start raising rates, inflation is a key factor to keep in mind, and that will, or as we've seen here with the last University of Michigan sentiment report, it didn't matter. The release lost its mojo, to say. So it's going to be interesting when we get, if there's more comments, it's going to be interesting when we get to the point where we get to the brink of the next recession. I'm not going to predict that. I don't think if anybody tries to predict that, then all for you. You go ahead. But anyway, does that kind of make clear? I know I've rushed it here. We're just doing, as said, we're doing some testing on different platforms. Initially, we tried Zoom, but for you guys, I know from today, we had some issues where people weren't able to. We had some issues where people weren't able to jump on to the Zoom meeting. So Zoom, so YouTube so far, is that working for you guys? Can you hear me clearly? It's just and also just the information that I've given so far. If you give me a thumbs up or a wave on the chat, or give me a hello or yes in the chat if you're on at the moment. Just give me a heads up so I know this is working, and if it's more useful. Omar Namuchi says yes. Yes. Okay. Good. Yeah. If it's easier for you guys to use this, then we'll move ahead. Unusual activity. Hey, James. Hello. What are you doing here? All good. All right. Good. Perfect. Okay. So we're about 15 minutes. Again, from the prior release there, not expecting, we didn't see any reaction from the figure there. If we look at the range and the triggers, if you do decide to trade the release here, then we'll go through some of the ranges here for the sentiment. Let's go back. So the highest estimate, according to Economist and their survey, the highest estimate is at 66 with a low estimate of 56. So if you wanted to, unusual activity saying I'm preparing, Omar Namuchi with a yes. I forgot what the hand sign means altogether, but yes, no, I know what you mean. Oh, okay. Okay, so those are your triggers. 66 for the high end estimate, and 56 for the low end estimate. Now, for ourselves, considering that in recent times we haven't seen a reaction from the University of Michigan sentiment prelim data, don't have a deviation here for you guys to use from our point of view, considering how the release has played out. And it's not one of the main releases that we're going to be looking at throughout MacroAce until the the sentiment changes and we start to see a shift in the economic cycle. Only then will we start to have a look at, or take a look back to the Michigan sentiment report. But is everyone clear on that? Is everyone good with the triggers that we've given for according to the median estimate of what economists are expecting? Actually, what I also want to show you is gold too. So gold, if I go back, because that's what's been playing too. Go to 10 o'clock. Okay, so with gold here, did see. So this is the thing. If the sentiment is worse than expected, the typical reaction would be, in this environment where the Federal Reserve is about to hike rates, for the dollar, usually you would see an appreciation. Of course, if consumers are feeling really good about the economy and they're expecting inflation to run higher, of course, bearing in mind we do have the 5-year ahead, the 5-year inflation prelim ahead of thoughts, and the 1-year inflation prelim. So if we see the consumers here seeing 5.1% for the year ahead for inflation, then, or in a year's time, then that adds to the bullish sentiment for the dollar, because it will lead to the Federal Reserve taking, as they have said, that they take the University of Michigan sentiment report into account when deciding on their path, or on what they're going to do. So the more positive the data is, that the better it is for the dollar at the moment. So generally, that's what we've seen. For the S&P 500, now you've got a mix of sentiments where you have, of course, the sentiment being that if consumers are feeling good about the economy and they're feeling good about their spending habits, then that'll lead to higher stock valuations. Of course, as consumers spend more, if they're feeling more confident. However, saying that generally isn't always the case. So it doesn't always translate into, if consumers are feeling good about the economy, doesn't always translate into higher spending. So for the S&P 500 at the moment, and the indexes at the moment, just to bear in mind that with positive Michigan sentiment data, we could see a negative reaction. As I said, that leads into the hand of the Federal Reserve hiking rates, and it could mean that they could hike even more, i.e., maybe the number of hikes could be increased, or the amount the hikes are increased by, that could also become higher. So again, no reaction to the last release, what we had seen, even though we had seen that big deviation from the report itself. But we'll see what happens today. And is anyone just in the chat, if you are watching, is anyone gonna trade the University of Michigan sentiment report, or or usually keeps an eye on the report itself? What do you guys do? So just 10 minutes away from that release there then, of the Michigan sentiment prelim. Reminder, 61 is the forecast, with a prior of 62.8. The 1-year inflation prelim at 5.1% with a prior of 4.9. The expectations prelim estimate or forecast of 57 with prior 59.4, and the conditions with a forecast of 65.8 with a prior of 68.2. So again, about 8 minutes away from the release there. So not too long to go down, just about a minute and a half to the release. Also a reminder with the current sentiment as well. You did have the news about 3 hours ago that Putin said that there are certain positive shifts in talks with Ukraine. We had seen a risk on reaction from the markets. The S&P had seen an appreciation. The Dixie had seen a depreciation there. So the risk assets came back into play after the headlines. So if we're expecting any sort of well, there you go. There's the S&P 500 there off of that initial headline. So if we're expecting any sort of reaction from the Michigan, as said, being that it's quite difficult to see reaction when we're kind of midway through our phase, then we may not get a reaction there. But usually what we tend to see the move the most when we do get at when we are at an expansionary phase is the oil, vice versa, is the S&P and gold, and also the dollar. About 10 seconds. Okay, 59.7, lower than the forecast there. No reaction from the markets as of yet. So S&P not seeing reaction there, gold not seeing reaction. So the one bit I want to keep an eye out for is the inflation. So inflation expectations rising 5.4. Okay, so the S&P 500 seeing some movement towards the downside here after that release. Gold not seeing too much reaction there. Okay. So looking back there as a reminder that we had the lowest estimate of 56. So gold now seeing a movement towards the upside here of that release. Again, not an instant move. Let's see if we have any other bits of news coming in. No other bits of news coming in that we can see, but do have some comments just prior to that of Macron talking about, from what I can see, the Ukraine and possibly the Russia-Ukraine discussions. Macron saying that summits in March and May will allow to detail a way forward. I believe that would be in regards to Iran.